And welcome back, everyone, on the Decoder channels for a new Skribr show with my favorite from the Skribr team, Leeway. What's up, bro?
Favorite? Oh, my man.
yeah.
Thank you.
I think I said
I'm
that
sure you,
last week.
I'm sure you say that to all of us when we come on the show.
Exactly. I said that exactly the same thing to us last week.
That's all right. That doesn't diminish it. How are
you
going,
doing, man?
Oh, after you.
Oh, I'm doing great. I just come back from the gym. I'm feeling strong, ready to make money in the Web3 land. Yes, that's what I'm doing, bro.
Love that energy, man.
Yes.
Love that energy. I hope I can meet it because I'm coming home from work and a little bit brain dead, but
Yeah.
I'll take some of your energy onto me and we'll be sweet.
I can it's Genki Dama, bro. Like we can
That's it, man.
Yes, that's the spirit. And GM everyone on Twitter and YouTube. Good day. Yes, Golden444. What's up? Hope you're doing good. Thank you for joining the streams.
There's not ever I saw one with the g'day.
Yeah, good day is like what? Like Australian? Yeah, it's Australian, right?
That's an Aussie thing. Yeah. But you gotta say it like that. You gotta say g'day.
G'day.
Beautiful. You've got it.
Yeah. Can I have Vegemite? Vegemite? No, Marmite.
Vegemite's house. Vegemite's house. Yeah. Have you tried it before?
It's fucking disgusting, man. Like, bro, it's the worst shit ever. Like, man, why? Why are you doing that to yourself?
You must have had it wrong, man. If you have Vegemite the right way, it's good shit.
No, it is not. I think that shit is a troll, man. Like, no. I don't understand the concept. So, boys, okay. Is there an easy way to say that? So, boys?
Probably not, to be honest. Snags, there we go. Yeah, there we go. Snags are slang for sausages.
Oh, okay.
Yeah, love a good sausage.
Snags and Vegemite.
Oh, I don't know if I'd have that combination. I am curious now, though, admittedly. But who knows?
And for anyone that's not Australian, Vegemite. Okay, so Vegemite is the Australian way of Marmite, right? No, the Australian from. I don't know where's that coming from, by the way. Like, what's the origin?
I'll be honest. I've had so many arguments about which one came first, Vegemite or Marmite. But I just say Marmite's the British version of Vegemite,
British,
which is Australian product. There's other things like Bovril and stuff like that too. But yeah. Well, if we ever get the chance, I'll show you how to properly have Vegemite, because guaranteed you have.
There's no way, bro. There's no way to properly eat that.
Yeah, I'm missing out. I need to create like a Vegemite meme coin now and just see if I can get Aussies to back me on that. I reckon you'll FUD it into the ground. No.
Oh yeah, bro, like 100%. Yeah. No, like that. Like your market cap will be so small.
No such thing as bad press, right? Who knows?
True. Okay, so yeah, let's do that. You can launch your smoothie.
There's some alpha for you guys. No financial advice for your own research.
Oh yeah. All in on Vegemite. Where are you, Vincent? I'm in Malta. I'm living in Malta. Oh, GM Vicky. Guten Morgen, Vicky. Yeah, see, that's international audience. Let's go. Okay, so great idea anyway. Vegemite coin. Like,
I like this golden person. I like them very much so. Anyway, I'll get you off the trauma train. Where would you like to begin for this week?
Bro, I think we should stop it like this stream.
Call it a night. We're good.
Okay, bye. Don't get drugged. Peace out.
See you next week.
Okay, so yeah, DeFi. Should we talk about DeFi? Because I don't want to talk about meme coins, man. Like,
the irony is, and a part of me does pain me to admit it, is a lot of the DeFi I've been doing has been on meme coins. Funnily enough.
What?
So
are you providing liquidity to meme coins?
I have been. Yeah.
How do you do that?
I've been playing around with some strategies as well. It's this, but mind you, this is high risk. Like, this is my degenerate sort of allocation of my holdings. High risk, high reward type stuff. But even then, it's about creating sort of like boundaries, parameters, what you're willing to do, what you're willing not to even touch. Trying to keep yourself out of trouble more often than not. Okay. But yeah, we can definitely have a chat about that too. You never thought you'd hear that from me, did you? LPing meme coins, but here we are.
I mean, yeah. Because so from my perspective, provide liquidity on an asset that can go like 3,000% in 15 minutes. And then going back down like 24 hours later to fucking zero.
Yeah.
How do you provide liquidity to that shit, man?
Yeah, it's all about being selective with what you're choosing. So
yeah, I choose none of them.
Well, the reality is 99.99999 are in touch with a 10-foot fucking pole. And you'll get the odd one here or there. Like there will be some days where I don't even LP anything. And that's fine for me. It's all about having some rules about what parameters does a token need to meet for me to be even interested in it.
Okay.
So one of the things for me personally is if a token's been launched within the last 24, 48 hours, I generally don't want to get involved because I need a price to settle. As a general rule, at least for the way I like to LP, is you want price to be as stable as possible. Ranges are your friend. If you're getting really wild, volatile swings, or prices in price discovery, and you don't know where it's going to go. Like you said, it could 3,000%, and it can dump back down to zero. Those kinds of things, I'm not interested in getting involved in.
Okay.
I usually look for meme coins that have been, at least a little bit more established. That's a bit of a how long's a piece of string sort of thing, and that they've got sort of good structure that I want to work with, and that I can operate with too. Because you are chasing sort of high rewards for the high risk as a result as well. It's all about like I sort of rationalize it like trading, right? When you're trading, you've got rules for why you'll enter a trade. You've got rules for why you cut the trade short and take a loss, whatever it might be. You'll have rules for when you'll take profit. Same thing with setting up a liquidity pool. What's your reasons for getting in, and what would be your reasons to close that position and move on as well.
Okay.
So if you create that framework, that gives you a set of rules to say, I'm not going to do anything unless these boxes get ticked. And that will mean you'll probably miss out on a lot of stuff, but it's going to keep you out of a lot of the ones that are going to wreck you. And we actually had a pretty good example of that the other night in the Skribr Discord, which I can probably show you as well when it gets to that too. But yeah, we can sort of go through the nitty gritty, some more specific details of that if you'd like.
Let's do that.
Let me see if I'm going to send you the direct link to the conversation we had in our Discord, and maybe you can pull that screenshot up.
You can share it also, like on your side, if you want.
Oh, screen share?
Yeah, you can screen share with like the middle icon of the interface.
Yeah, cool. Let me just make sure I've deleted closed all my incriminating windows.
No porn link, please. I don't get the chain ban.
For legal reasons, that is a joke, everybody.
Yeah.
Can you see my screen there?
Yeah, cool. Let me put it on the little screen, and then I do that. Then see, it's okay.
Yeah, cool.
Wait, you're providing liquidity to that chart?
No, I was not.
Thank you.
This was a bullet I dodged, and unfortunately, not everyone in Skribr did. So I do know some people who got caught into this because so the easiest trap to fall into, right? Actually, it's not doing that. Oh, hang on. Is there a way to share the screen and not the window? Entire screen. There we go. Cool, that works. So the biggest trap that I find people will fall into is they just go to say, I do a lot on Meteora. Let me just close my bookmarks before my email address gets doxed to everybody.
Oh, shit.
Hang on. That's okay. That was my own stupidity there. I don't know why it's doing that.
Okay, let me hide the screen. Okay.
Why isn't it letting me hide it? I've done this before where I've accidentally doxed my email before as well, so I got to be careful with it. Okay, hang on. I'll do it this way.
Okay.
I swear, why does it keep? It's hiding it on one, and then I open a new tab, and it shows the bookmarks all over again. Yeah.
You can start a session in private. Or do you want me to do it?
Yeah. Okay. If you don't mind pulling up just Meteora on your screen.
Okay.
So, sorry, folks. This is my own technological confidence on the show here. The easiest trap that people will fall into is they'll just go to a DEX like Meteora, like Radium, like Orca, and they'll just look at whatever's showing the highest APY or APR.
Yes, that's what I do, bro.
So if you click on DLMM up the top, that'll take you all to the dynamic liquidity pools, and then if you toggle the 24-hour fee per TVL. So the easiest thing to do is just to look on the right and go, yep, that's a big number, and I'm going to go for that. But what you actually want to do is take that information and then correlate it to an actual chart where you can see what it's doing. So I'm actually curious, if you type in DMAGA, so what's that showing right now? DMAGA, yeah, cool. And you've got to toggle show unknown token just so it shows up as well. Yeah, cool. And if you're on the far right, if you click that up arrow, I'm pointing at my screen as if you can see it. That's stupid. Yeah, cool. So what happens is a lot of people will see, that number, 16% in 24 hours. That's quite attractive, right? The other night, that was sitting at about 30%. But you've got other potential red flags as well. So if we jump back to my screen that I had up there.
Why is that? What?
Yeah, Meteora has moments sometimes. I've got the chart pulled up on my screen. If you stick over to that.
Tag and then tag and then tag. Bam.
Yeah, cool. So basically, I was looking at this. I saw the 30% at around the time that vertical line was drawn in. I thought that could be interesting. Let's see what that is. And I saw this chart, and I think for obvious reasons, even if you block out what's right of that line, there's a few things that I see there that go, you know what, that's not something I want to be getting involved in. As I mentioned on the note here, it just came off a massive pump as well. It's retracing. It hasn't found any significant support. Price is trending down as well.
Okay.
And then it's a bit of a hard one to judge as well because, memes are a personal thing. But as a meme goes, I thought that was really weird. I was like, MAGA but dark. That doesn't sound like something's going to stick to me. So rather than fall into the trap of trying to chase something and force the issue of being attracted by it 30%, I'm very happy to sit on my hands and go, you know what? I'm good.
Yeah.
And lo and behold, the next morning, the bottom falls out. And in that situation, that kind of collapse is probably one of your worst case scenarios because you're going to get left holding a bag that has just dumped and is dumping in price, right? Because if you drew the bottom range of your the bottom end of your range to where that wick is, where that vertical line is, at that price level, you are holding nothing but that coin. Right?
Yeah.
That big drop has happened after you now hold that bag too. So you get hit quite heavily.
Yeah. Yeah. You bought all of the coins on the way down because of you. Yeah.
So
and the USD value is shit.
Correct. The rule with liquidity pools generally is when price goes out of your range, you're going to end up with the token that is technically less favorable. So in this situation, on the way down, you're left with a bag of DMAGA that's just dumped. If it went up, you're left holding a bag of SOL, which I don't mind, but you would be better off just holding the DMAGA instead.
Exactly.
But that's sort of where impermanent loss comes in, and that's a whole other thing. But sorry, go on.
Oh, sorry. Like what I like with pool is like LPs is like where I get hit by impermanent loss. I still have hope that it will go back up and go back to my range, right? If I do that with coins that I believe in, like for example, even like Sol USDC or even like Sol Bonk or whatever, right? Or Sol BTC, Sol ETH. If it's a fucking meme coins and the meme coins dump like 80%,
Yeah,
that's it. It's over. Like you like 100% loss, right? So the risk reward is it's tough.
Yeah, and so this is why, like any sort of portfolio construction, you have different levels of what you're playing at. You're gonna have you're gonna have play with pools where if price goes down or up out of your range, you don't mind ending up holding a bag of whatever.
Yeah, no, exactly.
As well. And then when it comes to your higher risk stuff, I'm not putting huge amounts of capital where if it drops down and loses the range, then you know I'm left holding a bag that's going down. So someone actually asked a great question in the Skribr chat earlier this evening. And the question was, if you know you come back to a pool and prices drop down, what makes you decide to either close that position and take the L and move on, or hold on to it in the hope that price will come back into your range? Because it is very much a possibility. Yeah. And to be honest, it's a hard question to answer because it comes down to at what point did you see that happen? So if I saw it as like it's because the way I think about it is when I define a range for my liquidity, the bottom of that range is support. So the expectation is that if price goes down out of that range, I've lost support. I'm expecting price to continue going down. Yeah. So if I see that early enough, like a close below a support, the same way I might cut a trade, I'll then go, yeah, cool, I'm out. But if I come to look at my pool and price has shit the bed already and I've missed it, different story. You know, if I'm left holding that bag and it's only worth $50, I'm not that desperate to hold that $50. I might just hang on to it and see what happens. Yeah.
Psychologically, when you reduce your size, your position size, like I tell myself, okay, I don't care anymore because it's too small. And then I just let it die. But like if it's like more interesting and a bit bigger, then you manage it better, right? So it's a bit tricky to reduce a size. Like it's
sure. And that's where it comes down to.
You can train. You can train yourself, practice, test stuff, but
yeah, I think as well, there's a difference between having one pool where the value is $50 and you've got to decide, do I take that and run, versus having 10 pools that have shit the bed. And, you know, that's a very different story as well in terms of how you choose to preserve your capital. So it also depends, like, what's your expectation? Do you really think that price is going to come back? For most of these memes, they're going to die and never come back as well.
Exactly.
So if you're in one where that's your assumption is, then yeah, absolutely take the L and move along as well. So there's different levels to it. I think something that I'd really love to see is some sort of function like a combining DeFi and trading, where you can set your LP and then have a stop loss.
Okay,
almost.
That's cool.
So what I mean by that is, and if someone creates this, that'll be awesome. Where if you say you've got your range set, price breaks down, you've now got the bag of the shit coin. And so if you can set a stop loss that goes, okay, if price hits that level, I think price is going to keep going down. I'm going to sell all of that into Sol or USDC or whatever it might be at that point. And what that means is I don't have to worry about it shit in the bed while I'm away from the computer.
Yeah.
Same way you do it for a trade. I'd love to see that sort of that function being made available.
That's interesting.
Don't know how possible that is, but that could be useful. Similar sort of thing on the way up. When price breaks up out of your range, you're now holding Sol or USDC or whatever it might be, and you're not exposed to the token going up. So if you could create, say, a stop order where price goes up out of your range, you're now holding only Sol or USDC, trigger a buy order to buy that token because you're expecting it to keep going up. That could be useful as well. So just sort of like go around.
That's interesting. It could be like I was thinking about building that product and how would I do that, and then first you can do notification, and if it's working, then you can automate like a bonk bot stuff basically.
Yeah. So there's I know Meteora, they have a function for having notifications as well. The trouble is 9 times out of 10 I'm getting those notifications while I'm asleep. Because unfortunately, being based in Australia, a lot of the sort of more volatile price action does does happen while we're asleep as well.
Stop sleeping now.
Yeah, mate. For the sake of my patience, I need to be well rested, my friend.
Yeah.
It's not a risk I want to take.
Sense. Do you LP any blue chip higher quality alt? Leeway.
To be honest, not a whole lot. The reason for that is generally a lot of these high quality alts or blue chips, they're going to have a lot more dilution. So your potential APY is going to be a lot lower. So the aim of the game when it comes to providing liquidity is that you want the fees that you're generating to outweigh any sort of impermanent loss that you might be getting. And it's all about context in the market. If I'm in a bull market, I am confident that I'm better off just holding that bag and maintaining exposure to that bag. Because if price goes up, as it goes up, I'm slowly reducing that exposure. And I'm not convinced that on something where the TVL is going to be much higher and therefore the fees much lower, I don't know if I'm not convinced I'm going to make enough in fees to outweigh that impermanent loss. That's the game that you're playing. What I'd probably prefer to do to maintain exposure to them whilst earning interest, because I hate leaving assets just sitting there doing nothing, is providing them into, say, like a lending protocol. So something like Camino, for example. If I've got Solana, putting that into liquid staking, those sorts of things. You're not going to earn as high a percentage on them potentially, but you're not going to be selling out of it as price goes up. So you maintain your exposure with that. So Dynamics has been running a pretty useful delta neutral strategy where he lends his Ethereum on Solend, and then from against that borrows Solana, and then leverages that on Camino with their multiply function. So he keeps his Ethereum there, and then earns interest elsewhere, leveraging off of that Ethereum. Your risk is divergence. If Ethereum, if Solana, skyrockets and Ethereum stays where it is, you might run into liquidation problems. That's all about how you manage your LTV. But generally speaking, a lot of your higher cap alts will, for the most part, move relative to each other with the market.
Makes sense.
So that's something you can do.
Yes. And another remark from Golden444. Didn't Donny say Hogside will have stop loss?
So Donny's beta testing some stuff for V2 of Hawksite, and they've got some really cool features coming out with that too. Lot of analytics, which I think is really, really underrated. I think record taking and keeping data of what you're doing is extremely important in what you do. So we can talk about how we do that if you'd like as well. But these types of platforms, I think they've got a lot of potential to fill in a lot of needs and potentially be very, very useful. There's a lot of great potential in the DeFi space as well.
There is nothing better than filling up your spreadsheet and saying numbers.
Mate, you get me. There's nothing like a good quality spreadsheet. And there's nothing like filling that data up and just watching your formula go. It is a thing of beauty.
Yes, exactly. And then you add formulas that change the color of the cells. And then you create charts based on your spreadsheet, and then you say, "Oh, I'm so rich. That's so cool."
100%. You can watch the magic happen. You can watch the way you're performing. Number go up. That's what we want.
Yes.
But really, really important.
Yeah, and you rename your sheets like race to freedom, financial freedom.
Set your targets, all that.
I love it.
Stuff. Yeah, great stuff, man.
Exactly. Golden understand. TikTok boxes. Oh yeah. You think sex is good? Like spreadsheet is better, man. Spreadsheet is better. I'm telling you, man.
Oh dear. No comment. I'll tell you what. If you ever want someone with great spreadsheets, you got to talk to Drew someday.
Okay.
His his spreadsheets are something else. I've got to say.
Okay.
I've got to say. Yeah. So Drew, you've been called out. Give us the goods. But if you are interested, Donnie has actually shared a template for what he uses to track his liquidity pool activity.
Okay.
And that's in the Skribr Discord as well. That's really useful as well. We're trying to sort of add levels to that as well and expand it, add some more functionality. But yeah, I think really important for anyone who comes from a trading background. You know how important it is to keep track of your trades and know what you're doing.
Yeah.
Same thing with DeFi. No different.
If you don't track it, it doesn't exist.
Yeah. Well, tell that to the ATO. Sorry, not well. ATO is the Australian Taxation Authority. But whatever the equivalent of is in your country.
That's but I was saying that like in the startup world, like they say if you don't track your KPI, it doesn't exist, so you don't know your growth and stuff.
For sure.
Not in tax evasion, of course we pay your taxes.
No, never.
That's why we are in crypto, right? Yeah,
we'd never advocate for that.
Which is by the way, which is kind of funny because so if you think about it, country don't recognize like cryptocurrency as a legal tender or like currency whatsoever anyway, right? But you still have to pay taxes on it. So there is no regulatory like laws to regulate it.
A shares legal tender?
Yeah, exactly. That's what I want to say. But you still have to pay tax.
It's ultimately the pricing in fiat. Look, the governments will take any opportunity to take your money from you that they can. But I won't get into that too much at the end of the day.
That's okay. Like there is no financial advice because I ask Ariel because we don't ask money. We can say what the fuck we want. Malta will be brown paper bag to Victor. I don't understand this sentence. What does it mean? Brown paper. What? Victor?
I'm not sure what that one is either. Geez, someone's out Australian to me, and that's saying something.
Too much Vegemite, man. Like I don't understand shit. Some countries you don't. Yeah.
Hear him riding the kangaroo if you listen carefully.
Yeah. But that's okay. That's okay. We love the Australian audience. They showed up.
Always a good fan out from the Aussies.
Exactly.
Definitely checking out if you haven't already that spreadsheet. It's
okay.
Sure.
Yeah. Some country cash in hand. Okay. I don't understand. What? Oh, good. Oh yeah, no. There's a fucking delay. I need to fix that. The delay stuff. It's not good. I need to contact Restream because the delay it's not good. It's not good.
Yeah, that's.
But okay. Anyway, so we track spreadsheet. We do like the Metera liquidity pool on Ask high risk reward token, but not too much. We are smart about it. Do you intraday provide liquidity? Like you provide liquidity and then you close before you go to bed?
So I know some people who do. I personally don't, just because one, I don't have the time to sit in front of the computer all the time. But also I don't want to sit in front of the computer. I think one of the worst things you can do is to be spending lots of time in front of your computer watching your pools. I think that's one of the worst things that you could possibly do. Like with trading as well. It's terrible to sit there and watch your trade play out because your psychology is going to come in. You might see price start to move down out of your range and think, shit, I've got to close it. Then it's a fake out and you come back into range. Those sorts of things. I prefer to be much more hands off. That's also because I know I'm a bit of a nut job, and the less I do, probably the better. Yeah. So I will generally look for range. Some people will look for ranges on a 15 and 30-minute time frame and LP that. But you got to, exactly. But you got to be watching that because it can move very, very fast. I personally will only the lowest time frame that I will LP on is a range on the 1 hour. I prefer the 4 hour. Something that's been going on for at least a bit of time. The limiting factor to that is that your ranges are generally going to be a lot wider. So you're not going to be as concentrated and therefore not as capital efficient. But I don't mind that. That's just my personal style. Whereas someone who wants to get their range as tight as possible, well, you've got to be on lower time frames in order to do that. But it's much more volatile and a lot riskier as well.
Yeah.
So your personality really does play a lot into this too. Again, I know I've said it a lot of times tonight already. It's a lot like trading. I think for people who come from a trading background, having those comparisons really helps.
That makes sense. So do you do like technical analysis on ranges?
Yeah. Every pool I set up, and it's not fancy by any stretch. It's simply identifying support and resistance. That's all it is. That sets the bounds of your range. And then having rules like when do you cut your losses, what, like, you know, a conversation we had recently, actually, which I thought was very useful, was someone was asking a question in Meteora. Once you have a range set up, can you adjust that range, or do you have to close the position and reopen it?
Yes.
And the question I asked them was, why are you closing and reopening it? That's the real question you should be asking, is what was wrong with your initial range, and why do you feel the need to change it? And it's because, it went out of range. Well, it went out of range for a reason. So either you don't trust your technical analysis, or you're not following your rules and you're trying to move. That's where you get into trouble. So those sorts of things really important in terms of your mentality and how you approach it.
And how do you know you were wrong, but that's the trading aspect of it? Like you're wrong like 60% of the time, but you still gonna make your money like with the 40% left.
Yeah.
So your model works, or your model is shit.
Yeah. So
that's
part of your tracking. So one of the really useful things for me personally with using that spreadsheet is it's very easy when you're using something like Radium, like Meteora. Each day you're looking at your liquidity. It's telling you how much the assets you have in the pool are currently worth. And it's very easy to look at that day to day and watch it drop and fluctuate.
Yes.
And let that mess with your head. What you need to really see is how that price plays out over time. Because you might have a day where the capital loss for your holdings in the pool is down, say $50.
Yes.
And you've earned $20 in fees. It'd be very easy for you to panic and go, nah, not working, I'm out. Whereas if that price does come back and at the end of the week, that fluctuation is basically net zero, which has happened to me before, you're out on top because of your fees. So having those two things at play in front of you and watching that happen, for me, was really useful, because I was guilty of the, oh crap, capital dipped, even though it's still in my range. I'm going to cut this early. That was me breaking my rules. So I still do it from time to time. But having that range really helps to stop that.
Okay. When it goes out of range, you end up in the meme coins, but when it comes back, you get sold back. Yes.
Yeah. So the
being
analogy.
Out of range. Okay. So being out of range to the downside can be temporary, only permanent if you close it. Yeah. Yes.
Correct. So when the way I think about a liquidity pool and how your holdings work in it is, think of it like a seesaw. All right. So let's use an example. Let's say, name a meme? Views sold. You got a views sold.
Not a meme coin. What the fuck?
Yeah, not a meme, but I was trying to think of a coin. But yeah, views sold. Okay.
Yes.
So you start off with the pool with them fairly even.
Yes.
As the price of views go up, think about what's happening. What drives the price of views going up? It's people buying it. So that means that views is being taken out of your pool and soul's being put into your pool. So you're going to get fewer views, more soul.
Yeah.
Same with the other way around. When price of views goes down, it's because people are selling it into your pool.
Nobody sells.
Which you should not do. And you're going to have lots of views in the pool, less soul. Right? So it's a seesawing action as you go back and forth between the two.
Yes, sir.
So when you go down out of a range, you're left holding the token itself. Once it starts coming back in, well, what's driving that? People buying it. So your tokens are now being bought, and you're going to get some soul back now into your holdings. So understanding that mechanism is really important, because one of the biggest things I see is people going, I put 10 soul into the liquidity pool. When I withdrew, I only got 7. And I'm like, well, you didn't understand what you're doing, unfortunately. You need to know what those mechanisms are, and that's where impermanent loss comes in. So yes, being out of a range can be temporary to the downside and to the upside. You can always get fake outs where price comes back in, and all the protocols are set up so that your pool's just reactivated. But you only realize that capital loss if you close it. Now, there are situations where that's beneficial and you should do that. But like often you can close a trade too early, you can absolutely close a pool too early. So a great example of where I did this recently, actually. Let me get the chart up, actually. Let me do this. Probably better if I demonstrate my fuck up here. Oh, I'm still sharing my screen. Cool.
It's not on display, but yes, I still have it. Should I display it?
Yeah, you can turn it up. I've removed the bookmark with my email address. In hindsight, that should have been what I did the first time around. But sometimes the brain no worky. So I was guilty of one recently, and I'm very happy to share this.
Did you make money with Gamma?
Sorry?
Did you make money with Gamma?
No, I didn't, because I was an idiot. And I'm going to show you what I did because I was an idiot. All right, let's get this going. And I should disclose this as well. I never thought in my life I would ever buy a meme coin based on Kamala Harris. But anyway, here we are. Oof, I'm a bit laggy. All right, cool. We'll jump down to this time frame. So I had a range I identified around about this point here.
Mm-hmm.
So I'd found that. And I was like, cool, let's roll with that. I knew going in, this was me going higher risk than I normally do. So probably rule break number one for me was, should I have been sort of chasing that? And then what happened, as you can see here, is price started to come down to the lower end of the range. And my mistake was I identified this on the 1 hour, but then for whatever reason, I decided like an idiot to drop down to, I think it was the 15-minute. Yeah, cool. And then my dumb ass looked at this and went, oh, candle closed below support. We've broken it. That was stupid thing number two. So I closed my pool right here.
Such.
Oh, look what happens. In this situation, because this was me on 23rd. When was that? A couple of days ago. So that was my day off from work. So I was sitting in front of the computer all day doing stuff, and I just happened to be watching this. I should not have been doing that. And I saw that and went, oh, better do something.
But you never know, right? Plus, like this.
If I was at work for that day, nothing. That would have been okay.
Yeah.
So in this situation, a bit in the ass. But if this was a 1 hour candle close below support, I would have been a lot more justified in closing that position. But because I was on the wrong time frame, that's why that was a rule.
Oh. But plus, like your lines are zones, right? So it's not completely unvalidated, right? You know what I mean? Like, for example, on the way up, like you break the range, so you can, like, once the range is broken, then it makes even sense to long from here, right? But then it's reintegrate the range, so you will have been like hit by a stop loss because you're long after the range, but then you can take another long after you break the range, right?
So it depends on how you trade. Me personally, I'm not a breakout trader. Okay. I prefer to trade on the retrace. So I would not have entered the trade at any of these sorts of points. I would have been waiting for price to come back down and hold.
Okay.
And show that it was holding, because you can absolutely get things happening where you have a range, you break it out, it comes back and retests somewhere within that range. That does happen. Where
that's exactly what's happening there, right?
What would have been more interesting for me, seeing those higher lows there. Yeah. That would have been interesting for me as well.
Yeah. Okay.
So it comes down to breakout. Some people are very aggressive breakout traders, and that's higher risk with that. It's all whatever works for you.
Anma, you buy views like every day. your DCA views every day on Famous Fox. You just all the time. The range is every day, 9 a.m. in the morning. You go to your little computer and you buy 100 SOL worth of views. Because views is the alpha.
Which range do we buy views, fam? Every range. Every range. Not financial advice to your own research.
Kind of financial advice though. So, because, but it's interesting. Okay, so so you get like hit by impairment loss, and then you didn't even like take the any profit of the Kamala Harris coins.
I took a scratch.
So you lost twice.
I think because I knew going in, I was like, this is a higher risk sort of thing than I would normally do. I only put like a couple $100 in it. So I think I came out like a $20 scratch. I didn't I care. But it was the fact that it then did that where I was like, but it is what it is. But because I broke that rule. Yeah.
What are your performances annually like since you're trading?
Sorry, say that again.
Like, what are your like general performances year to year?
For DeFi
for DeFi I
haven't been doing it long enough to be able to really, because as well, there's different levels to it. So what I can tell you is last week. So last week I was when I started trialing some more higher risk stuff, and last week I came out 20% profit from the week.
Okay,
and that was with about I can't do math in my head. One sec. About $3,000, and I came out with about $600 from that.
Nice. Okay, and Sol in the last 7 days did 5%, so you outperformed Sol.
But mind you, some of those situations that this is not always a regular thing. Because last week there happened to be a token that a lot of us subscribed did very, very well on. It had a lot of volume going through. But then this week we didn't really have that. So you are sort of counting on that odd token here or there that just churns through lots of volume, because volume is your friend at the end of the day. And you'll go through phases with meme coins where volume does drop off. So it's not necessarily a sustainable thing, but it's about positioning yourself to try and capitalize on those when that happens. Because like we mentioned before, your portfolio deconstruction, you can have your high up risk portfolio. That's where you're a bit more active, where you're doing higher risk things, where you're trying to get that sort of, higher percentage return for the week.
Yeah.
But I wouldn't be doing that unless I had a decent pool elsewhere that was like churning away as well. At least on some level. And that's where things like your JLPs, like your flash trades can come in, where you've got something that's constantly doing something, so that if you take a scratch on your higher risk stuff, it's not the end of the world. More psychologically than anything else. Because if you put all your capital into higher risk stuff, there's a high reward, but there's a lot more pressure on you to get everything right. And not many people can handle that psychologically. That's what will mess them up more than anything.
So, like, for you to make money, you spread your risk instead of having like one big bet.
Well, it depends on what stage you're in, right? Because I think we always talk about diversification, right? But diversification is fundamentally more a capital preservation thing than a mood sort of thing. So we're talking about this in Skribr as well, actually. So if you look at a lot of the wealthiest people in the world, they made a lot of their money on a few or one or a few high conviction plays. Once they had that wealth, they then redistributed it into other sorts of things. Now, if you've got a small bag to play with, I would be probably going, do high conviction plays. I don't know if DeFi is the thing to be doing, because it is higher risk and more volatile. I'll be looking at something like standard sort of spot hold trading of maybe accumulate a bag of SOL or whatever it might be, expecting price to go up kind of thing, rather than DeFi, especially because DeFi is a lot more complicated than just spot buying and holding, So there's different levels to it.
And that's where I fucked up.
Sorry?
I should have sold the DGOT, protect my capital.
where
I did half of the job, bro.
Coulda, woulda, shoulda. Coulda, woulda,
Yeah.
shoulda is a cruel...
But like on thinking about it, bro, I'm fucking stupid. I remember the conversation with like Jas and stuff like, bro, yeah, I did like said 7 figures. Should I take profit? So yeah, you should sell some tickets. Should I wait a little bit more?
I'll do you one better. I'll do you one worse. So, you know the old saying, like, do as I say, not as I do. I gave you a perfect example before of I've got these rules right, and even I will catch myself breaking them from time to time. So I wrote an article around for late last year, mid to late last year, and it was looking at social media sentiment as being a top signal for a lot of things. Whenever you see people talking about this is flipping this is flipping this, it's fairly close to the top. I wrote that damn article. Then I watched on social media everyone bragging about DeGods flipping mutant apes on the timeline. And I should have registered in my head, yo, that's a top signal.
Yeah.
But I didn't, because season 3 was coming out, and I had high hopes.
100%.
And I made the mistake that I was emotionally attached to my DeGod because it was my PFP. And so that's a rule I have now, is I never PFP an NFT from a collection I'm buying and selling. Because if the fact that I'm using it as a PFP might stop me from selling it, that's not something I'll ever do, ever again. So I've learned some lessons from that. But you know, it happens to the best of us. And,
but also it's like it's completely different, because so if I would have taken profit along the way, I will never have reached 7 figures neither. You know what I mean? Because the bag was concentrated into one big, and it kept winning until it doesn't. But you know what I mean? Like, I would not have reached this number if some people like you just like mint and then resell at twice and 10x and 50x, right? I would have made money, but not that much. And also, if the team would have been able to execute season 3, then I would be the smartest guys in the world, right? So the end of the story define if you are wrong or not. But like, for example, Frank going to ETH, I still think it was the right decision at that time to take.
Sure. I agree.
But the end of the story says, like, on the timeline, everyone said, oh yeah, it was so dumb to give up on Sol. It was so obvious, blah, blah, blah. Bro, like, for 1 year, they were like top 1 and top 2 on Solana, and they were making like 80% of the volume. You want growth, right? So obviously you go to ETH.
Hindsight's 2020, I think.
Exactly.
You know, it's very easy to look back and go, oh, it was obvious. No, it wasn't. It definitely wasn't.
Exactly. But at the same time, like, for me, for my personal portfolio, I still should have taken like, even so I had like 50 DeGods. I should have sold 10 when we had like 800 like sold, 500 sold. You know what I mean?
And
I should have done that, no matter what the end of the story is.
So I think this is a really good point to make here, is everyone's very, very good and finds it very, very easy to tell you when to buy. To tell you, bottoms in, buy here.
And nobody tell you when to sell.
Exactly. DCA this, DCA. Everyone talks about dollar cost averaging into a position. No one talks about dollar cost averaging out of a position.
Exactly. Yeah.
And this was something I learned at the hard way in the 2017 bull run. The worst thing you can do is to try to swing with your entire bag. It never works, because one, you're dealing with much higher volatility fluctuation of the number. It's going to mess with your head, but you're never going to time it perfectly. Little bit by little on the way up, little bit by little bit, shave things off when you start thinking now's a good time. So when in this current sort of cycle, I had buy orders in at the lows. The moment they got hit on the exchange, I set my sell orders, staggering out at different levels, and I will not look at those. I will not touch those for at least a decent amount of time.
That makes sense.
I might review them from time to time, but it just means I've got something to secure profit if price gets there. And if it keeps going, not the end of the world. I don't care. like one of my habits when I trade is if I enter a trade on a pair, once that trade closes, whether I win or I lose, I delete that chart from my list in TradingView.
Yeah.
I don't look at it again because I don't need to know, was I right? Was I wrong? I couldn't give a shit. And if I probably mess with my head if I saw it. So I'd much rather just get that out and not worry about that anymore.
That makes sense.
I think those sorts of things are really important.
Yes. It's yeah.
Sorry, a bit of a
It's
rant.
hard. No, but it's hard. Like, but again, like, yeah, everything is psychology. Because for example, trading, you can learn like the fucking technical, like how to read the fucking chart in like 1 week. Like 1 week, you will be able to recognize all of the pattern and stuff. It's gonna take you 2 years to have the mindset of how to trade correctly ish.
Yeah.
And you're still gonna lose your money long term, like over 10, 20 years, right? So
and a lot of that is about finding what works for you.
Yeah, exactly.
Like I know someone who pattern trades, triangles, pennants, bull flags, whatever. He does that really, really well. I can't trade that stuff for shit.
Yeah.
I'm hopeless at it. And it's not that what the strategy is good or bad. It's just what works in your hands at the end of the day. And that comes down to back testing, trialing things, record keeping, doing all that hard work to figure that out, and finding what your edge is. It's a quote from Tom Dante, who I've learned from as well. He's great too.
Exactly.
So those sorts of things, definitely useful.
Okay, last request. Maybe we could, before we wrap it up, can you show us your routine in like 10, 15 minutes?
Yeah. Oh, honestly, the routine itself probably doesn't even take me 10, 15 minutes. So I do one check in the morning when I wake up, and just before I go off to work. I'll do a check once I have settled in after getting home. So that's like after showering, eating dinner, spending time with my better half. If I've got time, cool, I'll have a quick look there. And then depending on how close that is to my bedtime, I might take another look before bed. Each of those stints is probably no more than 10, 15 minutes. It's literally, so a really good habit that I do is I have a bookmark folder. I have a bookmark folder of all my open pools and charts. So I do a lot on Meteora. Unfortunately, Meteora doesn't have a central portfolio tab that shows all your open positions. And sometimes it can be laggy as hell, bringing the ones that you're in to the top. So I bookmark all those, and so I can just go straight to the pools. Not fucking around with that. Look at the pool, and then I record the data in the spreadsheet. What's the capital value at that time? I'll claim the fees. What's the dollar value? I'll have a look at the chart. Where are we sitting within the range? Yep, cool, happy with that. And then that's literally it.
Yeah, makes sense.
That's literally it. In terms of looking for more pools to go through, so I will go to Meteora, Radium, Orca, and I'll look at what the highest 24-hour per TVL is. And then when you look at those, don't just look at the highest percentage. You look at, well, what's the actual TVL of that pair as well? If it's only got a few $1,000s in it, I'm not getting involved. It needs to be a decent amount in there so that you're not left, holding it in case someone pulls the liquidity. And then you look at the chart and then correlate to the chart. So initially, I was going on Bird Eye and looking at the top volume for the past 24 hours, but most of those are tokens that are, they've just come out. They're not charts I'm looking in. So I found I was wasting a lot of time doing that. I'd much rather go to the established pools and work my way back to the chart from there.
Okay.
So that's sort of my preference with it.
Nice. What's the main difference between one-sided LP and two-sided LP? It's impairment loss, right?
What context? Because they're different things in different situations, Golden.
One-sided LP, just like one asset LP, right?
Yeah, so you can have a one-side liquidity pool that's like lending.
Yeah, exactly.
So that's you're providing to a pool, and then people are borrowing it. You're earning interest on it.
Yeah,
people refer to it as a one-sided LP, where so what a strategy that some of the boys do is if you're in a pool and price is broken down, you're left holding a bag. And what they do is they close that position. They take of shit coins and they open a new position where the lower end of the starts immediately above it. So take out a range. It also means that if it goes up, it's going one direction, selling it. So they And the reason people will refer to that as a one-sided LP because when you see the distribution on the platform, it's only got one side showing. It's still technically a two-sided LP.
Oh,
they will call it a one-sided position. Did that make sense? Do you sort of know what I mean by that?
No, that was like, yes, because I was like, ask you a follow-up because I didn't get it. Okay, so you close the position. You close the position when you are out.
So let's say, let's just, hang on. Yeah, here we go. Let's just hope this doesn't lag too much. Let's just pull up Sol USDC.
Yeah, like your connection lagged in the last 2 minutes, so it's weird.
Oh, okay.
Yeah, I was not sure. I didn't understand everything you said, but maybe that's
my computer always seems to lag. No, my computer always seems to lag when I open up any sort of dApp as well.
Yeah.
It's I am due for an upgrade. I'm definitely due for an upgrade. Okay, let's just go JLP Sol. Come on. Don't know why it's doing this. Sorry, folks.
It's okay.
Leeway's technology fails again. Okay. So. Any moment now. We need elevator music for this sort of situation.
Oh, yes, I can do that. Can do that. Can do that.
Rolling with the effects.
It's coming.
Oh yeah, you speak my language.
Called lo-fi.
Yeah, I love it, a lo-fi hip hop. All right, cool. So let's take this example here, right? So JLP is currently 0.018. So say this price level is now down below your range.
Mm-hmm.
Okay. So what you might do is, let's say we want to put ourselves in a position where if price goes up, we are selling our tokens as price goes up through a pool using a.
Yes.
So what you do is you'll go to Meteor, you go to a bid ask setting.
Mm-hmm.
You don't necessarily have to, but you can, and you'll start the lower end of your range as being above that price. So let's say we want to start selling at 0.02. And what will happen is, let's say if I do that, you will create some curve that looks like that. So you see how it only shows one side of the pool?
Oh, okay.
As price goes up, you've only got that side selling off.
But if you get out of range, you're buying even more token.
Well, no, because this pool is only active if price goes up, right? So where I've got this range above current price. So this is a strategy that some guys use where price is broken down out of their range. They've got a bag of shit coins. They open up a range that starts above it.
Okay.
So if it starts to go up, they're going to start slowly selling it off.
Okay, and that should catch up of your impairment loss from the previous pool.
To a degree as well. That's as opposed to just dumping the thing where it is.
Yeah.
So that's something that they talk about. So they refer to this as like a one-sided position, but it's still technically a two-sided.
Okay, makes sense. Okay.
Yeah.
That makes sense. And you can have like single asset. You can create like the LP with a single asset stuff, and then it's resell, and then okay, makes sense.
Yeah. It primarily comes down to what the pool's being used for at the end of the day. Most, like I've seen liquidity pools that have 4 assets in them. You know, on Curve Finance, I've had a few of those as well.
Not touching that too much. But Beefy Finance has that too. Like, you know, on the Binance Smart Chain, like you have triple. Yeah, you're right. Triple and quadruple assets.
You lost me at Binance Smart Chain.
The true OG chain, bro.
I'm just joking. Oh, look, I had my fun on Pancake Swap.
Yeah, exactly. Me too, man.
I think we all have some degree.
I was a genius for 2 weeks when I bought it for like 20 and then it went to 40 at like 200 APY, and then I kind of like sell it back to at 13 and then went break even, saved the bag. But bro, right now it's ugly as fuck, man. PancakeSwap is at $3, I think.
Yeah.
Yeah, PancakeSwap. Oh shit. 190.
Yeah.
Lost 5% today.
The fundamental problem with a lot of those DEX tokens is that you've got constant emissions from them being given as rewards.
Yeah.
People have nothing to do with them.
It's dumb token. Yeah, no, exactly. It's dumb token. Like you get them, you sell them.
Governance tokens for the most part.
Yeah.
Yeah, I haven't seen too many exceptions to the matter.
Jupiter, that's it.
Yeah, good point. Yeah,
but
it's not rewards for providing liquidity, though.
True. But like Jupiter is like it's the fucking pudgy penguins of token.
Yeah,
I think that's the only one worth something.
What Jupiter have going for them is the fact that there are so many different aspects of what they're doing, and so much potential for them to integrate the use of the token into it. Exactly. And I think that's going to be a really important thing. I think the active staking rewards at the moment, there is going to be a point of diminishing returns because the first 2 quarters, those rewards are bolstered by the fact they've set aside Jupiter tokens for it. Whether or not they keep doing that to keep incentivizing people, I believe it's up for vote when the time comes. But that's inflated it for now. If they don't keep it going, then it's going to diminish. Well, all right, people are going to be expecting a return on the value through something else. Exactly. As well. But we'll see. We'll see what happens. They're always trying new shit and finding
They will figure out to do it well. But the only thing I don't like is like the Jupinerary, like every year, when there is like more token not emitted, but like put into the circulation just from airdrop and stuff, like.
I think it ultimately comes down to token sinks and the tokenomics. What incentive are you giving people to actually use the token? But I do wonder as well. Part of what made Jupiter so appealing this time round, right, is because most people were getting rewarded for doing stuff they didn't realize they were going to get rewarded for. That's why the Jupiter was so good. Now that we know Jupiter is going to be a more or less annual thing until however long it goes for, there's going to be diminishing returns as people try and get that dilution too. Maybe those rewards aren't as sexy. Maybe they're more inclined to dump them at that point as well. Or maybe they're more willing to go, I don't want to dump, $100 worth of tokens. Let's hang on to them and see.
Yeah, exactly.
And dynamics. I'm curious to see how that plays out. But
it looks like it's going to be a topic for another stream.
Well, if that might be one worth having a chat to the Donnie and the Drop Beast boys about, because they have Jupiter farming on Solana, and they've also got Meteora on there as well for when they do the Met token launch too. So a few things to look out for. But with airdrops, you'll always go through this cycle of you'll get a few that pop up that blow people away. Suddenly everyone wants to get in on it. Dilution. It's shit. A period. Okay, then it starts becoming good again when people are too crazy. Yeah.
And it works like that for NFTs, except it's not coming back. So it's sad. But anyway, man, I think we can wrap it up on those little, on those points. Thank you so much, bro. That was a banger, man. Like without any topic point, boom, DeFi, bam, we did it, man.
Always appreciate you, bro. Got to. You always bring the energy, so I match that, and now I'm probably going to go pass out now.
Yeah. you give it all.
Always for you.
Yeah.
I swear to God, whenever it's just the two of us, it gets so unhinged, and I love it. We don't have parental supervision. There's no parental supervision from somebody else.
I mean, we don't need it. It's cool. Yeah, I love it.
It's cool. We could.
But anyway, thank you so much, Hanma Golden 444. Thank you, Sandra Milajevic. Sorry if I butcher your name. That's a possibility. That's what I do. Sorry about that.
Sandra Mihailovic. That's my attempt at pronouncing it. sounds Balkan, somewhere in the Balkan region. Lots of love for that part of the world.
But yeah, thank you so much for tuning in. And yeah, Liwei. Okay, so everyone follow Liwei, follow Skribr, subscribe to the channel. Yes, okay, wait, I have that somewhere.
Down there, like and subscribe. Somewhere. It's always somewhere.
Yes. Okay, wait. I have it. It's coming. Anyway, bam.
Oh, it's over that side. There you go. Is that working? Yeah. There
yes,
you go.
sir.
Over there.
Yes.
Over there.
Skribr Media, because Skribr Media is good. Yes. And follow Liwei again, because he's the top G. He's the top G of DeFi. Let's go. That's what's up.
Where are you? Where are you?
I'm here.
There you go. There we go. There he is.
Oh, yeah.
Down there.
But anyway, man, thank you so much for your time. We really appreciate it. Everyone, subscribe to the channel. Share it on Twitter. We need brand awareness. So yeah, share it, retweet, all of shit. No, I'm not done. Yeah, so we share it, blah, blah, blah. Share it, follow Liwei, follow Skribr, and yeah, that's it. We will see you next week for more streams. I was clicking on, I was hovering it because I wanted my video for the end, but then I clicked it, so I got shrugged. But anyway, bye, peace out. And that's a wrap. I hope you enjoyed the live stream. We'll see you in the next one, but